everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we take a look at the psychology behind the moves today so we can better understand it tomorrow. And today we're taking a look at the Euro currency futures. Now, there's a lot going on with Euro today, and we had Draghi speaking at 8:45 this morning, so obviously there was a little bit of fluctuation here. That would be this zone right inside there. But before then and after that, there were actually some pretty solid opportunities. Now, we don't start coming in the room until around 7 to 8 o'clock or so, that's where we're going to start this off. But really, when we zoom back a little bit, we can see that there wasn't a whole lot going on, right? We had a range to start the day off, a small gap down, immediately filled the gap and pushed up, then a new move down, then a new move up, then a new move down, and then a new move up. Now, this is where things start getting interesting, because when they try to go back down, you'd expect them to make a new low, right? That would be very, commonplace for a range. Make a new high, new low, new high, new low, just like we've seen so far. But they failed to make that new low, and they start turning higher. That's where things shift a little bit, because very frequently when you get that kind of failure, you're expecting two new highs, right? The first leg up and the second leg up to finish off that new high or new low. In this case, we start holding the prior day support levels. We have the ETH gap, which is floating right around in the middle there. The sellers try to come in, they fail. They try to come in again and fail again, and that allowed the buyers to push the market back up, assuming that we're going to get a new high and possibly one more high above that. Now, before we made it back up to the high, even though this was a beautiful buying opportunity if you hung on to it, they had another failure, right? We try to go back up, we get a double top. That's going to trap a lot of traders on the sell side. A lot of times sellers will see a double top, or buyers will see a double bottom, and they'll flood into it thinking, well, this has got to be the top or the bottom, right? Well, unfortunately, given the circumstance for the buy move, makes a lot more sense for this to be a trap for the sellers, and as soon as that trap fired off, triggers in the sellers, immediately goes right back up, and that allows the buyers to push once more, still assuming that we're going to get that high. Again, we get another failure at the highs, right? Well, sellers may be thinking, all right, well, awesome. It's another trap above the highs. It's a doji. Good chance that maybe this is the top now. We're missing this high. This is a good reason for me to want to sell, right? So buyers try coming in. They fail and turn into a twin reversal to the downside. Doesn't even trigger the sellers in before turning right back up again, and that is your third and final buy attempt before that news fires off to get that high, and it finally gets through the high and breaks out above. That's the move that a lot of traders, at least on the buy side, were looking for. They failed to get that rotation through the bottom. We end up getting two legs up through a new high, and it worked out beautifully. Then we hit Draghi on the microphone and things go a little bit crazy. They did end up getting that secondary leg to the upside, but it was during that news announcement, so probably not the best to be trading all of that. We start cycling back down after we've made those two legs to a new high, and now what are we expecting? We're expecting the range to kick back in. We want to see the market cycle back down to a new low and attempt to break down, which we haven't done so yet, but that's the anticipation at this point in time. So we have the buyers trying to come in, they try to come in, they try to come in. Every single one of them has been a failure, not getting any follow through whatsoever, other than maybe a doji candle follow-up, and then it turns back down. We have a strong bear response. The buyers try coming in one last time, and look at that trap that fired off above that candle. One tick, trap them in at their entry point, and immediately cycled right back down. That is a huge clue that the sellers are taking back over, back towards the lows, and that worked out nicely. Now, before it drove back down to a new low, we had one more attempt from the buyers, which couldn't even trigger in before turning down, and another beautiful bear candle closing on the lows to enter in more sellers. So overall, just a phenomenal day of price action in really just how to treat a range, right? Ranges are one of the most difficult things I've found for traders to really get a hold of, because they seem so counterintuitive, right? Buying to get to that new high, you have that secondary leg to the new high, buying is done. We're now switching to the sell side and looking for the sell move to go down, but a lot of buyers who maybe aren't super familiar with how these ranges work, they're going to keep trying to buy this thinking, well, we have support, and maybe if they use a small enough target, they could have gotten away with it. But for the most part, treating it as a range, looking to buy low, sell high, and understanding the cycle of a range allowed a lot more opportunity today for the downside after that move was over. So, great day of psychology in combination with technical analysis. As always, hopefully you found it useful, entertaining, maybe a little bit interesting, and we'll see y'all next time.